it's a good thing that Warner Brothers Discovery is being sold, and that's absolutely right. I mean, you look at the TV networks division. This has been the problematic division for all of these media companies. TV networks EBITDA slumped something like 27% in the fourth quarter. You look at the whole of 2025, EBITDA for that segment is down 21%. And the writing is on the wall. I mean, this is why this company is up for sale. It's very clear. I think really what everybody is going to be worried about is what is the outlook? Should the spin happen? Should Discovery Global be spun out into a separate company? What really is the outlook for the TV network business? And again, we saw kind of very similar results with Paramount as well. Yes, they're making, the best of what they can, but again, the fundamentals themselves are pretty weak across the board.
Management also flagged a multi-billion-dollar efficiency program. How should investors think about the trade-offs between short-term cost and long-term profitability for these initiatives?
Yeah, this is what we've always been worried about. I mean, we've seen, this story play out multiple times, Isabel, in all of these media companies. And yes, there's always synergies and there's always efficiencies to be extracted, but it does come at the expense of long-term growth. We've seen that with Warner Brothers Discovery. They came out with very aggressive synergy targets. And yes, they were able to deliver on a lot of those, but then it did kind of hamper their growth prospects, especially, in the TV networks business, where we've seen a significant deterioration in the fundamentals, in the outlook. So that is always, it's a very, very tricky balancing act. There's a very, they have to walk this really, this tightrope. Again, the whole deal with Warner Brothers Discovery for Paramount is predicated on something like about $6 to $8 billion in synergies. So, we'll see how all of that plays out. But yeah, it's going to be a tough road ahead, regardless of whether they win or they don't.
What is the update on the deal mechanics? Geetha, where are we right now?
Yeah, so it was really interesting, Paul. So in Paramount's earnings release yesterday, they said that there's a good chance of the Paramount $31 per share offer for all of Warner Brothers Discovery being deemed a superior proposal. And we've seen kind of Paramount rally a little bit on that. We've also seen actually Netflix rally on that. I think investors are becoming more and more comfortable with Netflix kind of walking away from this deal. So again, a lot to play out here, but there hasn't been any official word just yet from the Warner Brothers Discovery Board about whether, the Paramount proposal is in fact superior.
It seems like it's still a story that we're going to be following closely. Paramount also offered modest revenue growth targets for 2026. What key drivers do you think will determine whether the company meets that outlook or exceeds that outlook or even surprise investors, perhaps?
I mean, so the organic growth outlook, Isabel, yes, they're trying to do their best. Remember, they did, this is also a merged company, Paramount. They just recently acquired Skydance, so they're trying to do the best with those new film assets. But again, if you just kind of look at it across the board, in the context of the entire media landscape, it's still a very, very subscale company. Whether we're looking at streaming numbers, about 80 million subscribers versus almost 330 million for Netflix, or whether you're looking at the film business or even the TV business, everything is fairly subscale. So they definitely need some kind of an M&A strategy. Obviously, Warner would be perfect if it happens. If it doesn't, we'll have to wait and watch. But, they're doing their best that they can from an organic growth perspective. I just don't think it's going to be enough.
Do you think Netflix will walk away? That would be pretty bold.
They should, collect. They should collect the almost $3 billion in termination fee. I mean, this is really. I mean, you think about this, Paul, in the long term. Yes, it's a great asset to have. There's no doubt about it. But it also comes with tremendous amount of risk. Not to mention the biggest one being regulatory. So that's going to be a big overhang, for the next 12 to 18 months. And then, of course, after that, you have integration, execution risk. So it's by no means is it going to be a rosy path ahead. I actually think Netflix will be better off on its own.